Hello everyone, my name is Jake and welcome to Growth Academy. If you're new, please consider subscribing for more content like this one. China's crackdowns on the tech behemoths have prompted many investors to question the future of Chinese equities in recent months. Cathie Wood recently liquidated virtually all of ARK's Chinese holdings, and many others have followed suit in the face of a negative mood wave. Everyone, according to Dalio, is making a tremendous mistake. Dalio is the founder and CEO of Bridgewater Associates, the world's largest hedge fund. He feels that virtually all Westerners have misinterpreted China's recent initiatives. This video will explain why Dalio is getting big on China's future and why he believes everyone is completely incorrect about China's current initiatives. Ray Dalio's approach to money management differs from that of a conventional fund manager. Everyone is familiar with the concept of high risk and high gain. If you take on greater perceived risk in the stock market, your potential return rises. While it may appear to be rational, Dalio does not see it that way. Rather, like other fund managers, he concentrates on low risk and great reward. This is referred to as the pure alpha strategy. Investing in highly volatile assets might result in significant up and down movements. The average retail investor would be happy with that, but Dalio works with high net worth clientele who are frequently risk averse. One statistic, alpha, takes risk into account. Alpha is a figure that indicates a person's risk-adjusted return, which is determined by taking an investor's return and dividing it by the volatility of the portfolio. Dalio is solely concerned with providing the best return with the lowest volatility. To do this, he employs assets that work in tandem to reduce total volatility while maintaining high projected returns. Dalio's most well-known fund is the all-weather portfolio, which has continuously delivered high returns with little volatility. His pure alpha plan has also produced remarkable returns while having few to no major downturns. Dalio has been able to accomplish this mostly because of his knowledge of macroeconomics. Ray Dalio has the ability to predict and prepare for economic cycles, and he now feels that he is seeing something that many Westerners do not. Some of you may be aware that China just removed Didi from Chinese app stores. Didi was charged by China's internet government of illegally gathering user data. We really watched China take down the country's leading ride-sharing service in the blink of an eye. This has resulted in a 35% drop in Didi's discussion since its IPO in July. Another surprise for many investors was China's announcement that the education industry will become nonprofit. Many Chinese education businesses' stocks plummeted as a result of this. In the last 6 months, TAL, Education New Oriental, and GOTU shares have all dropped by 85 to 95%. These two occurrences, among others, have made investors concerned about China's future plans. Nonetheless, Ray Dalio has an entirely different perspective on the issue. Dalio believes that China has become increasingly capitalistic over the last few decades. The Chinese government's recent initiatives are only a minor component of a long-term tendency to enhance its residents' well-being. In a recent article, Dalio stated that most Western observers interpret moves like those two recent ones as a Communist Party leader showing their true anti-capitalist stripes, despite the fact that the trend over the last 40 years has clearly been so strongly toward developing a market economy with capital markets. With entrepreneurs and capitalists becoming rich as a result, they've missed out on what's going on. Dalio's comment contrasts sharply with Cathie Wood's previous declaration that she was concerned about China's current measures. Cathie said in ARK's weekly market webinar that she believes the incentive for Chinese residents to work has reduced. In essence, Cathie feels China is going closer to communism, whereas Dalio believes China has moved and continues to move closer to capitalism. So despite the government's recent measures, how does Dalio believe China is still capitalistic? In sum, Dalio believes that China is merely acting to promote its own country. Dalio stated that in this case, the policymaker signaled to God that it might not be best to proceed with the listing, and they understandably want to deal with the data privacy issue. In the case of educational tutoring companies, they want to reduce educational inequality and the financial burden on those who are desperate for their children to have these services but can't afford them. Dalio certainly has a different perspective on the issue than most investors, but his rationale makes sense. In truth, China's newest initiative to combat gaming addiction among youngsters was made for the benefit of Chinese residents. After all, why would the Chinese government damage their economy's future and hinder innovation? Despite our best efforts, the logic behind China's new rules remains a mystery. Chinese policymakers aren't explaining why they're doing it the way they are. Nonetheless, Dalio recognizes that this isn't the first time our present position has shifted. In fact, you can recall several instances where the reactions to China's moves were misinterpreted. For example, in 2015, retail investors flooded into the Chinese market, opening more than 30 million new accounts in the first 5 months of the year. When China's retail investment bubble burst, the Chinese government had no choice except to acquire equities and influence the market. In retrospect, Dalio realizes that this was done to rescue the capital markets. Dalio also recalls when the Chinese yuan plummeted in 2016 and the People's Bank of China was forced to broaden the currency restriction for the yuan. A currency restriction occurs when a government limits how much a currency's price can vary. In 2016, China expanded its currency restrictions in order to aid its capital markets. At the time, investors saw this as proof of officials abandoning capitalism. Dalio, on the other hand, believes that was a step to demonstrate greater faith in a capitalistic system. Dalio stated that, through it all, Chinese policymakers successfully managed to fall out and pursued their goals, i.e., the direction of their actions never changed. It has been in support of a fast and steady development of capital markets, entrepreneurship, and openness to investment to foreign investors. So I encourage you to look at the trends and not misunderstand and over-focus on the wiggles. Dalio believes that in order for investors to comprehend what is going on, we must first realize that Chinese policymakers have the aim of working in the interests of Chinese citizens, and that capitalists and investors in China's capital markets are subordinate to this goal. As shown in China's recent movements, Dalio went on to remark that those in capital markets and capitalists must not mistake their wealth for authority in dictating how things will go. Dalio was plainly aiming for Jack Ma, who had wrongly believed that his riches would bring him power. If you haven't heard, Jack Ma disappeared from the public spotlight for months after speaking out against the government. This was clearly a bad decision by Ma, according to Dalio. Charlie Munger, Warren Buffett's right-hand guy, adopted the same attitude as Dalio. Dalio's reasoning is overwhelmingly bullish for Chinese equities, although he acknowledges that China has concerns. The geopolitical climate is shifting, which is causing significant changes. First and foremost, the SEC is altering its regulations towards Chinese firms listed on the U.S. Stock Exchange. The SEC, in particular, has temporarily barred Chinese firms from going public. The second change is the United States government's recent threat to restrict pension funds from investing in Chinese equities. Dalio believes that we should anticipate similar things to happen in the future and invest appropriately, but that we should not misunderstand these wiggles as changes in trends, and that we should not expect this Chinese state-run economy to be precisely like Western capitalism. As previously stated, Dalio employs a pure alpha approach in which he invests in counter-cyclical investments in order to enhance investment returns while lowering total risk. He feels that diversifying into China is essential for any investor's portfolio. His main point may be summed up in 2 sentences. The recent moves by China are simply part of a long-term trend, which is that China is fostering an increasingly capitalistic environment. Therefore, Westerners like Cathie Wood shouldn't be scared of lowered innovation, as that isn't in line with the goals of the Chinese government. What do you guys think? Do you think it's safe to invest in the Chinese stock market? Let me know below. As always, if you enjoyed this video, please hit the like button and subscribe for more awesome content. I'll see you in the next one.